Hello and welcome to Enter the Boardroom with Newroll. I'm your host, Oliver Cummings, CEO of Newroll, the board search specialist and market leader bringing science to the art of board hiring. Today's guest, Lucy Walker, is chair at Aurora Investment Trust plc, SID at Henderson International Income Trust plc, Audit and Risk Committee Member at SportsAid, and previously was a trustee at Keen London, and founder at AM Insights Technology Limited, a firm that builds next-generation fund data tools. Lucy, a huge welcome and thank you for joining us.
My pleasure. Thanks for having me.
I'm always advocating for more entrepreneurs on boards. It's in the UK corporate governance codes that boards should be more entrepreneurial, and yet there are very few entrepreneurs sitting on boards, and I think most of them probably just don't want to be involved in boards. So I'm curious to hear, why did you start to build a non-exec portfolio, and especially so early on, relatively speaking, in your career?
So I was familiar with boards because I was an investment trust investor back in my Saracen days, and I was really thinking that that would be a career that I might do in 20 years' time, in all honesty. I knew that there was a journey and a process that you needed to go on in order to be considered and appropriate to sit on a board. One of those things was to be involved as a trustee or a governor or one of these kind of positions. And I, fortuitously, had always been extremely involved with charities. I was the treasurer of the Raise and Give Committee at university, which involved picking out pennies out of buckets full of snakebite. Probably the first time snakebite's ever been mentioned on your podcast, isn't it, Ollie? So from those days, I was really familiar with charities, and it wasn't difficult for me to get a role as a trustee. In fact, actually, I would say that there are a lot of charities out there that are desperate for trustees, particularly corporate trustees that bring any kind of experience in finance, law, etc., marketing even. Any of these more specialist areas, I think charities are often desperate for them, and they're not necessarily advertising because they're probably too busy to get around to doing it. So when I joined Keen London, which was the charity that I joined as a trustee, that was a really enlightening experience. I'd been in my corporate job for quite a while. Suddenly I was exposed to people that came from really different backgrounds. There were people that worked in communications, but there were people that had worked in the charity sector, people that were volunteer experts. It was a really fascinating insight into the kind of diversity of thought that you get around a board table. So that really led on to what got me the first paid board position, which was Aurora. In between, I was offered Audit and Risk Committee Member, a position as Audit and Risk Committee Member at SportsAid. And that was a charity that I'd always loved. You know, I'm a big fan of sports, and so it was an absolute honour, to be honest, to become a member there. Actually, I think best of both worlds, to be a committee member rather than having absolutely all of the responsibilities that you have as a trustee. You know, the Audit and Risk Committee is really the heart of many charities or indeed businesses, and so that was a fantastic experience that I was able to earn there. And I think those really propelled me to, when I got the call about Aurora, I'd already had a few years of those experiences, and I think that was what led me. But I won't deny that when I got the call for Aurora, I was quite taken aback because I didn't expect to get it. You know, this was back in 2019. I didn't expect to necessarily be starting that journey so young, but it has been a fantastic journey.
So it's one of the things when I talk to people about how to go about building a board career is to try. It's easier to get yourself pro bono board positions than it is to get those paid board positions. And I think what it allows people to do is to build up experience that if they then subsequently want to go and apply for a paid board role or interview for it, that they will be able to reference and demonstrate they understand what it means to be a non-executive versus an executive. And I think it also helps you get better at the role. It varies perhaps a little bit depending on the type of pro bono role you do. Being a school governor is quite a different pro bono role than being on as a trustee on a large major charity. Curious to hear if that was your experience.
Undoubtedly. So, you know, there were definitely things that the Keen London position was quite hands-on. There weren't very many employees when I first started, and that was actually a bit of a shock to the system. For those considering charity positions, it's really important to distinguish between ones that are large with a big exec team and ones that are small, where actually the board of trustees is very active in whether it's fundraising or even other areas. As treasurer, I was really quite active. There was a finance volunteer. One of the things I did when I left was make sure that we brought in a paid finance person that meant that there was sort of a better transition when I left. But yeah, there's no doubt at all in my mind that there is just a different, I'd sat on endless committees in my corporate job, right? I was in investment, we had policy committees and tactical asset allocation committees and, but there's a very, very different vibe, I think, when you're non-executive. And so what was the case with Keen, which was this small charity, it was non-executive, but there were still those elements of executive. When I joined SportsAid, it was very non-executive. It was very much oversight. And I learned a lot. I learned a lot in both roles. And actually, interestingly, I found that there was a lot more crossover between those two roles than I would have expected, in the sense that I was able to take learnings not only from SportsAid to Keen, but actually the other way, which I never would have expected. I mean, today SportsAid's got multi-millions in income, and Keen had a minute fraction of that, but yet there were learnings. And so I think that is a really good illustration of why actually it doesn't matter the size of the organisation. Actually, it's about the processes, and often there are learnings that are across the board. So if I then think about my paid roles, I would absolutely say that I am a better board member because of those two experiences.
A lot of people struggle making that transition from the pro bono into their first paid role. And then typically once you get that first paid role, it then becomes a lot easier. Any reflections on what enabled you to make that transition?
I was fortunate in that regard because I was known to the investment trust sector, having been an investor. And so actually I had a call where the person said, look, I've got no idea if this is something that you would even consider, but we just thought that maybe you might. And actually, little did they know that it was something that I'd thought about, as I say, probably a decade or two into the future, but I had absolutely thought about it. And so that really meant that I didn't go through the process that I know some do of applying to paid roles and not getting them. But if I think about what I contributed to in the interview process, and indeed when I joined as a board member, the absolute key was thinking about the value add, right? So it was thinking about, look, I'm young, I don't bring other attributes that board members have in terms of years of experience and other things, but what I do bring at that point was a very relevant experience of the views of shareholders and the potential that we could do in terms of making the trust, this was Aurora, making the trust more marketable, and those things I could bring that the board didn't necessarily have. And so clearly you need to get to interview to really get into that, but you can articulate those in cover letters, which are generally needed for roles. So I think that would be my reflection on what I think facilitated me to, because I still have, my husband actually always tells me off whenever I reference I got the call and therefore I got the job, and he says, well, no, actually you didn't get the call and get the job. You got the call and then you interviewed and you got the job as a result of that. And so I think my reflection would be what I just described, about thinking about what was I going to bring that might not be on the board already, that would be of benefit to the board and to the shareholders.
What have been the biggest challenges for you as a relatively younger non-exec?
I've been fortunate to work predominantly with people that have been incredibly inclusive to thoughts wherever they might originate. And so I think that has meant that I haven't faced too many challenges in relation to the view that, oh, well, you're young and you don't necessarily know anything. A challenge that I've had was, I remember being at a board dinner, and at board meetings, I was absolutely fine. I felt comfortable. I felt that I was able to contribute. And suddenly I was at a board dinner and the conversation just went in a direction that I wasn't able to participate in. And that was actually the one that I was chair of. I've actually never said that to my fellow board directors, but I would be happy for them to hear me say it. But I really remember thinking, gosh, I'm suddenly out of it. And actually there was that sort of sudden realization that there is a difference there. So yeah, I actually think it would be that, although it hasn't played out in terms of board meetings. It was interesting that it did at dinner.
That's interesting. It reminds me of a conversation I participated in, probably aged about 10, staying with my grandparents at the time. They suddenly started talking about A123 something. And I was trying to work out what on earth they were all talking about. I eventually realised it was the latest hip replacement, and realised, okay, I'm in the wrong place here. I never thought about that as an exclusionary thing on boards.
Well, it was obviously not quite as extreme as that, because my fellow board members are not quite in hip replacement territory. But it was a conversation about cultural references that I didn't know about, and suddenly there was lots of excitement and sort of discussion about it. And yeah, I actually, as I say, I've never mentioned it to them, but I probably will after this, actually, because I've never thought about it until you asked the question.
It strikes me that investment trusts could present themselves better to younger generations. I look at the appetite for some of these crypto investments, and the investor in me just shudders. And by the way, should be clear, nothing on here should be construed as investment advice. But I look at those crypto platforms and I think, why have they caught the imagination so much? And yet you look at investment trust, and the investor in me thinks that if you have no interest in investment, but you want a place to invest in that is going to provide you sensible, inflation protected returns, like, there are few better places than to put it into an investment trust. And yet investment trusts feels like they've failed to communicate that. Really curious to hear how you think about that as someone who spans both the investment trust world and has a good handle on the digital world.
Clearly, investment trusts have gone through a really tumultuous period, and that has resulted in discounts being really wide across the board. And so regardless of retail, actually, it's been a tough time. But you're right. I think that the industry can do a lot better. And I would say that topic is one that I spend a lot of time thinking about. And we, for example, on Aurora are just about to soon releasing a new website. And I've been pretty involved in that, given that I have a tech business. I've been able to provide some feedback in a way that was probably, very different to if I'd been involved in that a few years ago. That website is intended to really try and entice people in a way that the old website just didn't. It was very staid, and it was the old world. So I think that you may be aware that in the investment trust landscape, wealth managers are selling their stakes down. They have been for quite an extended period, and retail have become significantly more important. And so I would not be surprised if every board has this topic at the heart of their strategy sessions over the coming years, because those that don't will be left behind. So yeah, absolutely key.
Feels like there's a parallel with the trend that we've seen in retail, where manufacturers are starting to try to go direct to consumer as opposed to via the retailers, to varying degrees of success, looking at the recent share price of someone like Nike. But what's your perspective on that? Is that the future? Investment trusts wise to look to go direct to consumer, or should they be relying on those larger distribution platforms, the Hargreaves Lansdowns and Interactive Investors of this world, to do the marketing for them?
They definitely can't rely on the platforms to do it for them. Post Woodford was in a very different scenario than we were before. We're not going to see so many advert for funds and for trusts as we perhaps saw before. What I would say is that your best strategy is to really combine the two. So you want to leverage the platforms, because there are some really fantastic publications and events that are worthwhile for trusts to be involved with, that allow them to access a much wider group of investors in one go. But I think at the same time, there has to be direct marketing as well. And there are lots of ways to do that, whether it's PR in nationals, whether it's digital marketing, digital advertising. But the problem is that it all costs money, right? And so the $1 million question is actually, if you could, you'd do all of it, but you can't, because unless you're one of the largest trusts in the sector, you don't have the budget to make that work. So that's been the real challenge, I think, for us, has been thinking about what is going to get the biggest bang for buck.
And how do you think about that? I've never thought about that actually. What, as a business marketing, actually both B2C and B2B, we think about cost of customer acquisition. How do you think about it as an investment trust board? Are you thinking about cost of shareholder acquisition?
It's difficult because, as ever, marketing is difficult to attribute at the best of times. But I think for an investment trust where you have so many other forces involved, it is really difficult. We've seen it as the kind of perspective of being able to decide as a proportion of the fixed cost what is a reasonable sum to invest, and then thinking about where best to allocate that. And it's got to be a mix, as I say. So there's going to be some stuff related to the platforms, there's going to be some stuff related to PR, there's going to be some stuff related to maybe some advertising and general marketing. And if I think about my tech business, it's not as precise, I think, in investment trust world as it might be, as you say, in thinking about the kind of CAC side of things. So it's a bit more sort of woolly, but I think that it works, and so far we've seen good results. So really it's that, and again, I've learned this from my tech business, you try to fail quickly and then double down on the things that are working, and that's the kind of approach that I bring through into the boards as well.
Move on to talk about broader value add within investment trusts. I'm really interested to hear how you think about the sort of the broader value add for both Henderson and Aurora that the board provides.
So on both boards, clearly there are the things that need to be done, right? The governance, where I think if you've got a really good company secretary, which we do on both boards, that is not quite a box ticking exercise, because clearly it's important, but it is a process that doesn't take too long because you've done some work in advance with the COSEC. You've got the key points, decisions, recommendations, the board meeting. Where the board really adds value, I think, is in two places. One is challenge to the manager, and that will be challenge in two ways. Challenge to the portfolio. So I was a fund researcher, right, for my career. That was literally my job. I don't sit at a board table and question why they've bought a stock in the sense of saying that was a stupid idea. But I will say, okay, interested why you perhaps bought, I saw that it's had a good run. I noticed that you didn't take profits, or I saw that this one sold off and then you sold it. And I'm really just trying to dig under the skin. And it's not about calling managers out. It's about being able to identify signals that a manager is either sticking to their knitting, which to me is the most important thing, or perhaps is going off in a slightly different direction. And that would be something that would raise red flags that I would be discussing with either board and escalating. So that's one side of the manager one. The other one is fees. We're in an industry that has seen enormous fee compression over a number of years, and with the increase to passive, that will continue for a period. Question mark over where peak passive ends up, but there's definitely the direction of travel on fees is down. And obviously where investors get to benefit from that on an investment trust is that boards are encouraging managers or negotiating with managers to push fees down, whereas you obviously don't get that in a fund, especially for retail. They're not benefiting from the fees which your larger clients are better leveraging or negotiating with them directly, and so they do benefit from that in an investment trust. So that would be the 2 points on the manager perspective. And then the second bit would be strategy, and that's some of the things that we've just been talking about. But that also would be obviously the broader strategy of, we're operating in a sector that's been really tough and wealth managers are selling down and all those kind of really big themes. And actually, I sit here and definitely don't have the answers to all of those really big challenges. They're really significant trends, and I always welcome thoughts around the table as to how we can navigate those trends. But I think for me it's a combination of manager and strategy, and I would add risk into the strategic bit as well, because clearly being cognizant of potential risks that need to be managed must form part of the strategy.
Can we maybe dive into that? How do you develop the strategy for your boards in real sort of practical terms? I'm always fascinated, particularly with investment trusts, because it strikes me that there are some. We had Jim Strang from HGT in a recent episode where they've got a really clear strategy and it just hummed for me. And then there are other investment trust boards where I think, well, what is your competitive differentiation? What is your right to win here? Curious to hear how you go about setting that strategy and how you think about it.
When I decided to go for Aurora, when I got that call and I decided to interview, I knew that when I was an investor in investment trusts, that were not doing anything differently and could have fitted in a fund, I didn't consider necessarily had longevity in the future. And so for me, the consideration of Aurora was really relevant because Aurora is extremely concentrated. It would not fit within the constraints of a UCITS vehicle with, the 5-10-40 rule. And so that was the first one. And so the only way that you could access the strategy run by Phoenix, incredibly being running for 25 years with multiple percentage points above the FTSE over on an annualized basis every year, the only way you could access that other than Aurora was via a Bermudan based fund, which was basically not accessible to a huge number of investors. So that ticked quite a few boxes in terms of being different and therefore sort of having a place in the longer term. In relation to Hint, when I first saw it, I thought maybe it wouldn't tick that box, but actually Hint was making very good use of the revenue reserves in relation to smoothing income. It's an income strategy, that's its focus. And so obviously that's something that you wouldn't be able to get in an open-ended fund. So that was really key. It was it was global equity income, but ex-UK, and that was not a strategy that was available in any open-ended fund. Not to suggest that one couldn't launch, but it didn't exist, so that was another tick. And then at the time that I invested, they had invested a chunk of the portfolio in very high-yielding bonds. That was during COVID crazy market times that we saw, and because it was quite a steady eddy strategy rather than investing tons in equities, they did invest some more in equities, but they used leverage to buy high yielding bonds, and that was quite an interesting approach to boost the yield, and again wouldn't have been something they would have been able to do in an open-ended. So slightly different answer to your strategy question, but that was sort of the context of what my justification for why those trusts should exist in the longer term. And actually, I think those things are still true. I would say that Hint has had a tougher backdrop because it's an income strategy. And obviously, I joined in 2020. Over that period, we've obviously seen interest rates rise, albeit recently fall. And, that presents a challenge, as indeed it has done for a huge number of investment trusts that have yields, what's their place, where do they sit in the context of those much higher yields that you can just get in your bank. I think that we've done a huge exercise to speak to shareholders and understand what their requirements are, and the majority are really still wanting an income generative strategy that's steady eddy, the same thing that it was when I joined. In terms of strategy, we on both boards we do an annual strategy session, a formal separate strategy session that falls outside of the usual run of meetings, and I find those really useful to dig into things that you typically don't have time to dig into outside of the normal agendas. And that's been consistent through both trusts to be able to give the time that's needed to those kind of crucial bigger picture decisions.
So for a first time investment chair listening to this who has the task of setting strategy for an investment trust for the first time, how would you explain to them how you go about setting the strategy of an investment trust?
It's a really interesting exercise. I think that it has to start with the investment strategy. That's the reason for being. What is the value add to investors? Why should they care? And is it the right one? There have been examples in the past of boards running strategy sessions and perhaps making a decision that was correct for the past but wasn't necessarily correct for the future. So it's not to suggest that that's an easy thing for boards to do. I would say that strategy sessions should always involve not, I was going to say a lot of people, I don't necessarily mean lots of people, but so all of the strategy sessions I've ever run involved multiple different people from them. They've involved external input, quite often got shareholder who's in the room just to come in and present rather than being there for the whole session, and really trying to get that kind of holistic picture of what the backdrop is. So that, I think, is the first one, kind of investment strategy in the context of all of that. The other is obviously who you're going after, right? Who the potential investors are. And I think that's, for most investment trusts at the moment, that's pretty similar, which is that you still need to serve the historic wealth manager proportion of your shareholder base, but you also need to attract retail, and that's fairly consistent, I would say, across the board. Some are much more retail, but the majority, that's the case. But making sure that you're thinking about the investment strategy in the context of those. And then it's, how do we get people to know about who we are so that we can continue to attract new shareholders, because obviously it's the marginal buyer that supports a tighter discount or hopefully even a small premium, and then that facilitates you to be able to consider transactions, those things. So I see it as a sort of ladder of steps, but I really think it does come down to the investment strategy at the core.
And is there ever a tension in that discussion between what do our potential shareholders want and what will generate the best return? So, for example, I imagine there was a time, if it's not still the case, when lots of people wanted, environmentally friendly things, and we ended up with the greenwashing scandal, because I think a whole load of, and I saw this, in fact, a whole load of funds launch with very tokenistic green credentials, and the underlying and fundamental investment wasn't there, or it was simply a tokenistic thing they were going after. But conversely, I look at, it's the classic sort of herd mentality, isn't it? AI at the moment, you look at a lot of these things and everyone just wants AI, and it doesn't necessarily feel like all of those returns are going to be as attractive as perhaps other spaces. And conversely, I mean, I'm a sort of value investor at heart. It's the only thing I've come across that consistently generates above inflation returns. So I can't understand why everyone isn't always just pushing for value investors, which I suspect, given your funds, will be similar for you.
Definitely. This bizarre dichotomy of a value investor who's gone on to launch a fintech business. It's a bit of an unusual one, probably. I definitely think that is a tricky one. And actually, there's the one I alluded to earlier of boards having a strategy discussion where they've made a decision that was correct for the past, and probably, to your point, correct in terms of what investors are asking them to do today, but is not necessarily the thing that is right for them to do in the future. But I have sympathies for that approach, because nobody has a crystal ball. I would say that for me, you raise an interesting question of, I always think, do the right thing for shareholders. That's absolutely always at the core. And sometimes that will be doing what they say, and sometimes that will be doing what they need, whether it's negotiating on fees or whatever it might be. And I guess so far in my relatively short board career, I haven't encountered a time when what shareholders have wanted has necessarily been at odds with performance, although on hint it has been tougher. And actually we did increase the yield as a board back when we had our previous strategy discussion, and actually that was what shareholders wanted, and it didn't necessarily play out. So I guess it's a really difficult one, isn't it?
I hadn't thought about this before, but it's that Henry Ford quote of, if I'd asked my customers what they wanted, who would have said faster horses, and I'd never thought of how that might apply to the investment trust space before, but I guess it could.
I'll maybe give you an example which is not specific to investment, but for example on Aurora, we introduced an investor event, which isn't necessarily anything groundbreaking, plenty of investor events, but we separated it from the AGM. Again, plenty of trusts do that. But what we did was we introduced an event that had multiple speakers from the manager. But in addition, at the end, we had a sort of teas and coffees or drinks afterward. We had tables around the back of the room, which were sort of company tables, and they were attended by the analysts of those companies. And this was a suggestion that I made based off actually Phoenix's main annual event, because they do that, but they actually have company kind of representatives there as well, just by nature of some of the investments. They have a closer relationship with the managers, and that has gone down incredibly well. Would investors have asked for that? Probably not, but did it go down really well, and are we going to do it again? Definitely. So I think that you do have to try things whether you think investors will necessarily have thought about it themselves or not.
The other big topic facing investment trusts at the moment is the whole scale question. We've seen the merger of Alliance Witten. Curious to hear how you think about that. What are the key considerations that go into those sorts of discussions? How would you, for example, know as a board if you should be looking at something like a merger?
I think that the first question is, what are our investors saying to us about what they think about us today? And generally the premium discount is the kind of the first message, right? So are we trading on a premium? If we're trading on a premium, that gives us basically free rein to go and see what else is out there. The next question is, what's our performance been like? If we've got premium performance, generally that is a good indicator to being able to propose a transaction. I think that you can also do transactions when you don't trade on a premium, so long as there's a relative premium discount differential. So you might be trading on a discount, but a tighter discount than your competitors or your peers. So I think those are sort of the three key tenets. But then there are lots of other considerations. So thinking about shareholders, is the manager a big shareholder? Are there big shareholders that are unlikely to be supportive? Are there value investors on the register? What about the assets? Are you trying to think about merging a Japanese equity fund trust with an infrastructure trust? There are just some things that are less likely. So there are lots of considerations, but I think those first three are the sort of the, can we even consider this? And then the next ones are kind of, how could we manage this if we did decide to go for it?
Time is flying by, but before we go to the lightning round, I want to talk briefly about your experience of becoming a chair, which again you have done at a relatively early stage in your board career. For someone listening to this who's thinking about making that transition from non-exec to chair, any tips? It's a topic that comes up regularly in our non-exec mastermind groups.
I would say that the biggest one would be, as chair, your job is not to lead, it is to bring out the views of your fellow board members and advisors such that the best decision can be reached. And that probably is something that I would have, I generally have something to say on most topics, not all topics obviously, but most topics. And so kind of learning to hold back, it's a skill that I've had to learn to make sure that they're really inclusive. The other thing actually that hasn't come up in this discussion but that I get good feedback on is that, and again sort of thinking about the digital sort of side and maybe the younger generation side of things, after every board meeting I send out a type form, which is a survey link, and I ask a consistent set of questions, which is basically, don't have them exactly off the top of my head, but things to do with how was the length, how was the engagement from people, did we reach resolution of all of the topics. I asked them to rank the topics that they would like to speak about at the next, they would like to see this focus of the next board meeting, and then I asked for qualitative feedback on what they enjoyed or found most useful and what they found most frustrating or they didn't like. And I would say that I have had pretty good feedback on that, and I've found it incredibly useful for helping to both get, because I send that out the very next day after the board meeting, and I am quite pushy about saying, could we please have some responses? And I originally I made it anonymous, and I've actually changed that so it's no longer anonymous, because actually it's more helpful to then be able to dig in and say, go and speak to that person, say, that was really interesting what you said, can we talk about that a bit more? I thought anonymous would make them be more honest, but actually I think it's the same. And it's been more useful. So yeah, that's just a small tip, but just something that I've definitely found beneficial.
Oh, I love that. You're a chair after my own heart. I insist on a what went well, even better if at the end of every session, to the extent that in a recent even better if on our offsite, I think the remark was made, even better if we didn't have to do a flipping even better if at the end of every session. But I will persevere nonetheless. Curious to hear, as a chair now, what you're looking for in prospective board members.
What I say to people when they ask me advice on becoming a board member, I will often say, don't be disheartened by not getting a role, because very often it's not about you, it's about the specific fit of you with the skill set of the rest of the board. So often character doesn't come into it as much as skill sets. Really, it's diversity of skill set, because I've just seen that work so well, and that's obviously not kind of, that's just own the thing that you're great at. From a personal perspective, I like to work with people that are inclusive, that are engaged. I really don't want to bring somebody onto the board who's not going to be reading board packs, who's not going to be reading the annual report. There are some things that are not as fun, and that's the reality of it. So those are equally important. And I suppose with some humility as well, because we all need to sit around the boardroom and respect the fact that there is going to be somebody else around this room, around this board table, that knows significantly more. And everybody needs to have the mutual respect to hear that and to then be able to make a better decision as a result. I would say the point about skill sets is really important, but those are the sort of traits that I'm looking for when I'm interviewing.
And when you talk about skill sets, I'm guessing you do a board skills matrix.
Yeah.
And look at what are the skills that you think you need to deliver on the strategy, what do you currently have, and what are the gaps. Can you maybe bring that to life with examples, if that's possible?
So an example of a board member who will be retiring sometime in the next year or 18 months or so, he will leave a big gap. He's David Stevenson. He's a very well-known person in the industry. He's a journalist, but also has a huge wide-ranging experience understanding brokers, shareholders, etc., even companies. So he'll quite often have spoken to somebody that knows something about a company. So that's going to be a really interesting position to fill when he goes. And we haven't done the skills matrix yet because it's a bit early, but my gut feel is that whilst I have shareholder knowledge, I think that there has been huge benefit to having two perspectives on the Aurora board. We're a 4-person board. We've got an ex-fund manager, we've got an ex-private equity and an accountant, we've got David, and we've got myself. And so I think that whilst you want diversity of skill set, actually sometimes when it's a really important, having two perspectives is useful. So my gut feel will be that we will look for somebody that has experience of the market, an ex-broker, probably not an ex-fund manager, because there's already myself and Rachel on the board with that. Hopefully that gives you a bit of a flavour of some of the things that I'll be thinking about and that we'll be thinking about when we have the noms committee to consider what the skill sets are that replace David. In all honesty, it will be a difficult one because it's never cookie cutter, right? It's not like we're going to find the perfect replacement, but we will discuss what the most significant traits are and skills are that we need to look for.
Brilliant. Lucy, time has flown by, which means it's time for the lightning round, where I'm going to say a quick statement and ask you for a short response if you're ready.
Sure.
Best book every board member should read, and why?
So not a book, but an article by HBR, How to Be a Good Board Chair. It was one that was shared with me when I became chair, and it is full of absolute gold. So I would highly recommend it to any current or prospective chairs.
I'm pleased to say that author of that article is an upcoming guest on the podcast. Boardroom behaviour that irritates you most? Having
a meeting where you've already considered what the prospective outcome is, and then the meeting basically being irrelevant because you've already made your mind up.
Most valuable board ritual?
I think it's the board dinner, actually. I mentioned, obviously, that ironically being sort of the not necessarily feeling as included, but that wasn't as a result of them. I think that it's really important to have that opportunity to have relationships outside of the boardroom.
Favourite quote?
What you do has a far greater impact than what you say.
Most significant professional insight?
When I left my job at Saracen, I thought that the world revolved around your day job, your corporate world. And I've left and obviously sit on a couple of boards and have my own business. And that perspective has just been absolutely eye-opening and has been so beneficial in every walk of both those individual roles, but also life.
Worst professional advice you ever received?
Sometimes when people give you advice, they can add some kind of unsolicited elements as well, and they do it in the best of intentions, but I think sometimes it can muddy the advice that the person was actually after.
What have you changed your mind on about boards over time?
What I touched on earlier in relation to coming into a board where you have a strong view on something and making sure that you are giving enough space. That article really helped actually to think about giving enough space to the other voices around the room to really eke out a great discussion before you share your perspective.
When was the last time you got a significant judgment call wrong in the boardroom, and what did you learn?
I think that your question on hiring was quite relevant to this. I think that there was a hire that was made that perhaps wasn't quite right, and I think that maybe that could have been known earlier. Some things happened that meant that board member was no longer involved, and I think the learning was that if you don't feel like it's a hell yes, then it should be a no when it comes to hiring.
How are you better today as a board member than when you started?
How long have you got, Ollie? I mean, there's a list as long as my arm. The one about perspective, the one about the question I already answered about listening, really listening, just, yeah, so many things. It would probably take too long to go through them all.
Finally, 3 things our listeners should take away from this podcast if they take nothing else.
If you're not, and it's all about thinking about the value that you add, and that's irrelevant of the thing that you're going for actually, but it becomes more relevant. It needs to become more targeted when you think about what you're going for. So your value add as an individual is what it is, but then there should be some more specifics or targeting based off what you're going for, investment trust, operating company, etc. If you're an NED thinking about becoming a chair, I think it's about realising that it is a much bigger job, thinking about what your approach is going to be, because there are a lot of things that you could do that will really help, but also things that you could do that won't. So thinking about that, go and read the article that I mentioned. And then probably the last thing would be that question that I've thought about this because of the last question, one of the last questions you asked me, which is that, I spent a huge amount of my career seeing the benefit in being a specialist, and I'm glad that I started as a specialist. I think there's huge value in starting as a specialist, but for me, having a portfolio career and my own company, the benefits of being actually a generalist and having that perspective is so beneficial and compounds with everything that you do. And so, just as a general learning, that's been huge for me, and hopefully that might resonate with some of your audience.
Lucy, I don't know how you find the time to be a successful founder as well as with a plural career as chair and SID, but I'm confident that our listeners will have found that hugely inspiring. Thank you so much for taking the time to share your experience and wisdom with them.
My absolute pleasure. Thank you for having me.
If you found this conversation interesting and would like to be involved in similar discussions, join the New Role Board community. Community membership gives you access to 24-hour discussion threads on boardroom challenges and opportunities like those we've been discussing, smart online networking events, one-to-one career sessions with our headhunters, third-party board roles, mastermind groups, and Q&As with senior board members. Head to community.newrole.com to find out more.